to the handle. Good morning, everybody, to the MMT group and everyone else alike. What we would like to feature is that 630 put that we featured dearly all week, all last week, and a week before it. And we're featuring that today is Wednesday, and Friday is a holiday. And the weekly option expiration, they were marked down to be bought, 23,411 contracts, and they were damn wholesale down here. And Apple was to be shorted yesterday as we made that 632 high for the $10 drop, which we originally got, and a great bounce off that bottom. And once again, ring, 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 ring. A ring, 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 ring. Because that lower support level, when you guys locked and loaded, off she went. But the markdown, that means from the top down short to the lower support level and then getting net long. One of the things on the 635 put, which was the greatest put to be bought for the weekly, they were down here. They were marked down 915. 1790 was the previous close on 10,264 volume. And what a great opening bell this will be. The high yesterday was 1410 with a 590 range. And once again, it's all about that weekly seat. We have new seats available starting out on a monthly level. And they're $4,000 to $10,000. So you can inquire at info@stockmarketfunding.com. And once again, you can see that gap down ratio is about $6 to the handle. Now, this in the money call, that short term that got too inflated in value, we're going to put bids down here below the market, and we're going to try to pick this thing. And what has to happen is Apple has to come down toward that 620 area, slightly undercut it. Then what has to happen, and this is all before the bell, it's 6:19 a.m. Pacific Standard Time, 4/4/2012. Yeah, and once again, people don't know how to sell them up at the highs. It was time to get out yesterday at the close and buy the opposite end. And that's what you can't lose. So here you go. What we're going to do is, depending on where the support level hits, we've already going to have some alarms set in this range. So I'm going to have Goalie set an alarm at $12.50. That's $7 below the market. Okay? I'm going to give a live limit order, and that's going to be at $8.70. And what does that mean? If they capitulate the opening bid, and what does capitulate the opening bid represent? MMT and everyone alike. They disappear from the bid. And when your order is sitting there electronically, you're to be able to get hit. So as we come down to those support levels, and that's the kind of trade management we're going to do. So you got to take a look. And sometimes right when they come down and hit, if that buy action bar comes racing out of that gate and you don't make that engagement right away, at wherever that first tier market will be in the first 10 minutes of the opening bell within the weekly, and how they would walk away, capitulate the bid, disappear. In order to get hit down there lower at that level, they're going to have to do that. Sometimes they do it, but in order for that to happen, you're going to have to break below the lower channel, and it's only going to be in milliseconds, and you're going to have to hit that buy on that deflated call, gap down, against, as you're selling out the 635 put, and you're selling the 630 put, well, you're engaging in on that $610 call. Same thing on Priceline. We got puts on it. What are we going to be looking at? We're going to go over here to the 730 call, which I have right here. We're already locked and loaded and ready to pay at the lower level, and we'll have bids out here at about $3.60. And it was a great trade, up $12 on the contract. Down thing almost got to my $7.50 price target. Was a great buy, and it likes to pull back about $30 when they finally make their bull exhaustion highs. 10,000 shares is all that's traded. So we're going to be on this price line on the 7:30 call, making that entry off of that wholesale bottom against the 740 put that was purchased yesterday. They were marked down $15.40, and I'd be damned if we didn't buy them down here. And some people were in within $1 range of the low. Some people are a little bit lower. But once again, they're at a close, they had a 615. They had quite a huge range of the day, was 1123. Mind you, with the 1540 clip, we'll be watching the Amazon short, the ISRG, the CMG, the CEO, the CRM. Technology has reached a channel exhaustion peak that must pull back going into next week on Monday earnings. So here we are, going to be stealing lots of bids. All bids, bring them to the plate. I will be taking a look at this monster bull called NASDAQ 100. And what will I be looking at doing? I will do what I do best. I am already short the 2,800 put monthly. Now, because it's my due diligence, I will go over here and go to this strike price of the 2750 call that was marked down yesterday, 37.78, 23.60, last print, 25.90. Now, for my index people that trade index options, this will apply to you. We're going to be watching the daily on it, and we'll use our system, and what we're going to be looking for to get that call to my index people on speaker 2 there, what you're going to end up watching for is how we come down, and every time we've been hitting that daily simple 10-day simple moving average, you've been bouncing off of there every time to support that long side entry. And when you come down to the daily, when you come down here, MMT and everyone else in the other group, what you're going to want to take a look at is 2761 is a 10-day simple moving average. But let me tell you, on a daily, it's always the secondary primary for standard deviation. The 20-day is where they like to, if they undercut, you never know what happens in high caliber markets and bull runs with bull tops. But you could come down. So you're going to be looking for 2740. This is where we were going long before, MMT. Right here. Yeah, we were for those folks. And once again, when we start just looking around up here, we already know where these support levels are going to land. So this is not the issue. The issue is MMT. Is how do I trade long and watch the simple moving averages, and that's your update there. Now,
hey Mario, I'd like to apologize to you.
3 minutes to the bell, 2750 call. Now, why am I, as a market maker, going to trade the 2750 call when they take all the premium out? I'm going to let the 2800 put for the April 421 go higher, yeah. Because I got wholesale a couple days ago up into the peaks. They were adding it. You can add to this. But the thing about it is you can't trade it now, not this side. This side's going to gap up a little bit, and they're going to take the premium, and I'm going to start my bids right here. I'd love, so I got to close at 25.90. I'm going to start bidding it, even though that it's 33.30 by 38.20. I got to close right there on a weekly, 27.50 for today, I believe. And I'm going to put my bid out here because if they can bring that down and break that support on that NASDAQ 100, I'm going to start putting my bids out here right now at $15.60. And I'm going to set an alarm that if this thing drops below 22.5 in dollar price, I want that alarm to go off right away and where that 20.70 on this markdown and why I can trade long this side against the winning side over here. Pre-market, options weekly expiration, MMTs, and everyone alike on the other speakers there, I will tell you, it's time to get it on. It's time to get it on. And they're raising that gap up on Apple. So you can easily go up and roll over. Once again, if they watch all eyes on that 630 put,